I was always of the opinion that it's really difficult to make money in a hotel that's less than 60 keys. And what I really understood from this hotel is if you can get the rate high enough and your occupancy is still pretty strong, then you can have it make money if you have a strong management team. The restaurant component, because we got a lot of questions like, hey, I don't want to invest in a restaurant. I want to invest in a hotel because the restaurant does bring a lot of revenue, but still the profit comes from the
From the
hotel.
hotel side.
But I would argue that if the hotel didn't have the restaurant and it also didn't have Auberge, I think Auberge, the name and the brand, adds a tremendous amount of value. They recently came on in maybe 2020, 2019. Then we wouldn't have paid what we paid. They wouldn't get the rates that they're getting, but the restaurant just keeps people coming back. And it's a real cool story. If you're looking at kind of a boutique hotel or a hotel like this, you really got to pay attention to the food and beverage because it's one of those things that you can't quantify, but it's going to add tremendous value if you can get it right. It's your first time on the podcast.
Thank you. First time.
We've been doing this. We have over 100 episodes. So Charles is our chief investment officer at Dovehill, and he's never been on the podcast. So I thought the perfect time to bring him on was talking about White Barn Inn, which is our latest acquisition. It is a boutique luxury experiential hotel that we bought in Kennebunkport, Maine, and we closed in August. And we're just going to kind of break down a little bit about the acquisition, why we thought it was interesting. We'll give you the story about it, how it came to be, and maybe we'll talk. I'll ask Charles some questions. He'll ask me some questions. We'll just go back and forth and we'll kind of banter, almost like a little post documentary on the purchase, which meanwhile, we're like 2 months in. So we haven't really done that amazing stuff yet. So this investment could be a complete disaster. I think it's going to be amazing, but I actually think it's going to be one of the best investments we've ever made. But White Barn Inn, welcome to the podcast.
Thank you. Thanks for having me.
Actually, before we start, why don't we just give a little bit of your background? You're clearly, it was funny. The other day, someone thought you were from the United Kingdom or something, but you're French. What's your background?
Born and raised in Paris. I grew up in Nice on the south of France, and kind of early on got interested in the hospitality business because frankly, when you're in the south of France, that's really 90% of the business is hotels. I wanted to go to hotel schools. I went to hotel school in Switzerland. My dad was like, well, those schools are expensive. So I said, you better start working in a hotel first, make sure you like it. So I ended up spending a summer at the Carlton Hotel in Cannes. I was a page boy, which a job that really doesn't exist anymore. You basically report to the concierge and you just run errands for guests. So I did that for like 3 months, and I was like, I loved it, and decided, yeah, hotel school was the right thing for me. And went there, worked in other hotels, luxury hotels, the Negresco in Nice, and then the Chevredor in Aise between Nice and Monaco. I ended up after school basically wanting to move to the US because I felt like the business of hotels in the US was certainly stronger, I felt at the time, than in Europe, which was probably more about service, etc. And I did that. I ended up getting 18 months internship with Sofitel in Philly, and did that. Met my future wife at the time. We ended up, for visa purposes, I ended up going back to the UK, actually to Europe, which the UK at the time was part of Europe. So I was like, well, there's plenty of job opportunities. I went there, and then she went there with me. She just got a master's degree while I was working, and that's where I started kind of going more on the world of, of numbers, because I was really good at it. And I basically worked for Accor, the headquarters in the United Kingdom. They had about 90 hotels at the time. I was doing management accounting, internal audit type work. And after about 2 years, my wife's visa was expiring. And so we're back to square one. We had to move back to the US unless, wanted to get married. But we didn't want to do it for, I guess, quote unquote, the wrong reasons. So I was like, well, it's my turn. I want to go back to school. And I applied to a few MBAs, but I also applied to Cornell. And at the time, they had like a master's degree at the hotel school to specialize in basically real estate finance. And I was like, that's exactly what I want to do. And basically did that for 12 months. I got hired really early on by PricewaterhouseCoopers. At the time, they had a pretty significant hospitality real estate advisory group that I joined and did that for about 3 years. We're doing a lot of again, business plan underwriting, valuations for very large portfolios, and was domestic, international, was super interesting. And frankly, they carried me during the great financial recession. So that was kind of, lucky because a lot of my peers were losing their jobs left and right. And after about 3 years, I basically just moved it was in Philly. I just moved to Hirsch Hospitality Trust, where I stayed for about, I think, close to 12 years. When I started, the REIT at about 80 or so hotels. I started doing acquisitions and then moving, still kind of on the transactional side, but I did a lot of dispositions. I mean, I can't remember. I think in total, I may have sold with them like 40 or 50 assets.
You sold one hotel to us.
Right, the Hyatt Place.
Yep.
And we're selling mostly all the limited service assets, and eventually ended up kind of moving towards more traditional asset management role, where I was overseeing a portfolio. I had like lots of various portfolios with them, but geographically, I had hotels in New York, Washington D.C., South Florida, California. Those were like the markets I spent the most time on. I'm sure I had like other hotels in other markets. And then maybe by the affinity I had with the assets, I think they were the Shahs, Jay Shah, and Neil, CEO and CEO at the time. And they were always giving me like kind of a lot of the independent lifestyle boutique assets. Which I really enjoyed working with. So did that, and like I said, stayed there for about 12 years. I ended up during basically, I think it was end of 2020, November 2020. I basically was hired by Jones Lang LaSalle to do third-party asset management for them, and they hired me, and they basically were giving me their biggest clients. It was like a German pension fund with $1.5 billion of hotels in the US. And then I had also,
and they were all luxury lifestyle hotels, right?
4-star, 4 or 5-star. And then also had like a Middle Eastern sovereign wealth fund that had ultra luxury hotels as well in the US that I oversaw with them. And then, it's history. I did not stay actually really that long because, we have a common friend of ours basically reintroduced us. I mean, Jake and I knew each other from just the industry.
Yeah.
And reintroduced us and say, I think you guys would be a great fit right now and should work together. And right, I mean, that's basically how it started.
We'll get into White Barn, but just maybe two questions that your story brought up. So one, Hirsch has started kind of, I guess, this typical Indian immigrant story where they started kind of with economy budget hotels, and then the kids wanted to really expand. And what Hirsch did was phenomenal. And unlike many others, they became the largest hotel owner in New York City, but is primarily 3-star kind of limited service hotels like a Hampton Inn. But these were Hampton Inns that were cranking because they were in New York City. And at some point in the Hirsch lifeline experience, they started to really focus on luxury and experiential type hotels. Can you talk a little about maybe why they did that and why that was an important strategy to them?
Yeah, I mean, clearly the New York was breakthrough, right? The ability to really build a small-ish limited service asset, I think 100 to 120, 130 key in like on middle of a half block. Just the density of the hotel was really breakthrough the way they were doing it. But that's kind of it's one side of the story. I think ultimately there was fatigue to be in the limited service side, I think, mostly driven by it's always the latest, the newest shiny hotel who's going to get most of the business. And it was ultimately so driven by new supply, right? You could have a great hotel, you just opened it, especially where originally they were in like more like secondary, tertiary markets, suburbia, and where again, you have a great business park half a mile from you. You have the newest hotel and doing fantastically well for 3 years until someone else opened another one. So I think there was definitely fatigue on that side. I think there was a clear focus to start really getting in urban markets and kind of let go of the suburban strategy. And then ultimately there's more things you can do when you start getting on full service, right? I think you also tackle more segments, right? When you look at segmentation of each hotel, there's a little less segments, really only a Hampton Inn. There's a lot more things you can play with. So I think really that was the main purpose in really trying to do that. There's really diversity of demand, which is also, that was always a key, something we were really focused on. And I'm still, I think, from being there for 12 years and hear Jay and Neil talk about it all the time, they always think about it too. It's like, is there enough diversity of demand that if one segment falls, do I have other things that are just going to make it okay, right? So that's been key in the way they've transformed the portfolio. Clearly, there's also, better cap rates, right? The investments I've seen kind of less risky.
The other thing that your commentary brought to mind was you've spent probably 20 years of your career in highly institutionalized environments, big companies, 12 years at Hersha REIT, JLL, PwC. I think a lot of people are thinking about being an entrepreneur, getting out and doing their own real estate. Can you talk about what it's like working maybe for those companies versus working with me at our company, and what kind of you experienced through that process as being the big differences?
Yeah, I think personally, I always felt for myself that larger companies, I was just not molded for them. Like, it's just like, I'm very high pace and I just enjoy I enjoy like just getting the results that I need. I just don't really care for maybe sometimes politics that comes with larger companies. I don't have really patience for it. And ultimately, I knew that eventually that would slow me down in an even larger company, right? If you even think like kind of the biggest private equity firms within, New York City, that's just not something that's going to work for me. However, clearly thrilled to have done this experience. Ultimately, the one thing that would be difficult for someone new, young, to jump in a firm like yours is you have to be a little bit of a generalist early on, right? We just tackle so many, topics, whether, it's, I don't know, it's, a few hours on acquisitions, on asset management, on capital raising, on like issues with a lender, like, not necessarily issues, but like, investor relations is a big piece of it. And ultimately the big companies, you're going to be a lot more siloed, right? And I think that was definitely an important step. And I would not have been, I think, successful within a smaller organization like yours if I had not went through those steps before.
Yeah, it's cool. You really get exposure to doing everything because, we've really ascribed to the model of being lean and mean, almost like a kind of a Navy SEAL organization where you have people that are very tactical, they can do a lot of skills, but also allows you to bring in specialists when you need them. And then when you don't need them, they're not there and they're not on your payroll. And that's something we've done a lot recently. And it's really cool because you get to work with some of the best people in the industry because you can kind of bring them in for a project, bring them in for a few projects, and then you can pause and bring them back again. So it's unique. I'm glad you joined. And let's transition now to White Barn. So a little bit of the background. Charles and I raised Dovehill Opportunity Fund 2, which is our second discretionary fund. We're still in the process of raising it, actually. And part of the strategy there was we kind of raised an initial bucket of capital to go out and do some deals. Then people always like to see the deals that are in the fund. So we did 2 deals now in the fund. People have an understanding of what those deals are. Interestingly enough, we have 2 strategies in the fund. One deal was one strategy and the other deal was the other strategy.
Yeah,
so
perfect. Yeah.
we kind of got lucky in that sense. But basically what we are focused on is preferred equity and investing directly in an equity position in experiential lifestyle assets, similar maybe the stuff that you were doing at Hersha, but really it's similar to the things that and the places that you and I like to go and the hotels that we like to stay in and those experiences that we like to have. And I think what we started to see, setting aside preferred equity for a moment, in that experiential boutique hospitality space is because if you have a very unique hotel in a very unique location, it's very difficult to bring new supply into that location. But that hotel has a unique ability to outcompete other hotels in different markets or in other places around it because it's so unique and special. And not only does the operating business have value, but the real estate has value because it's not something that you can easily recreate. And in hotel investing, it's a real estate investment and an operating investment. But in a lot of hotels, the weight is more heavily placed on the operating investment side. With these kind of unique hotels, I think it balances out a little bit where it's the operating business has to work, but the real estate also has some value as well on the buy and on the sell side.
Yeah, for sure. And even on the pref side, I mean, I tend to lean nowadays with more investments. I mean, the pref deal we did in Savannah was similar to what we're, thinking or theories of investments on the fee simple on the GP side are. Like, this was a development for basically we invested in someone else's deal in the pref side for GPs that were basically developing a 64-room luxury, upper upscale luxury independent lifestyle hotel in A++ location in Savannah. So even on the pref side, we tend to feel that this is the better place to be. And I think you and I talked about it a lot. Like, there's always been like the trend, right, with like younger demographics that, everyone's talking about it. It was like how, younger travelers are nowadays favoring just accumulation, quote unquote, of like experiences versus like hard assets, right, cars and I think just ultimately the COVID crisis ultimately accelerated some of that and expanded maybe some of that to other demographic. And I think that's the reason why we see a lot of those lifestyle hotels still really outperform some of the other asset classes. I think the United States, I don't have stats in my head, but it's a crowded hotel space. Like when, if I was probably going to look around the world and look again, number of hotels per capita, I would think the US ranks pretty high up. So just the ability to offer something really different than just four walls, which a lot of hotels, that's really all they do right now. It's very special. So again, on the pref side, even now, I kind of favor a hotel that would fit kind of that box.
And the other component is the demand. And what we've seen is particularly at the luxury level or the higher end, and I would put experiential kind of boutique hotels in this category as well, the demand has been incredibly resilient. Despite what you're hearing with the economy, people are still traveling. And I think travel and experiences are going to be one of the last things people cut out of their lives in tough financial times. So, take the White Barn Inn, for example, is this hotel that we acquired. Depending on, this year has been a little bit bumpy with all of the changes in the economy and the financials. Right now, we're definitely hot. The stock market's at all-time highs, but there were earlier parts of the year where it was a little soft, yet this hotel outperformed year over year. And actually, while we were under contract, continued to get better and better and better on the forecast. And I think it's solely attributable to kind of this luxury traveler. And it's kind of interesting that, we talk a lot about diversity of demand, but this hotel actually really lacks diversity of demand. And the demand is primarily coming from, leisure people, but it's in a market that is just so incredibly resilient. Kennebunkport, Maine, where people want to go there. They've been going there for 20 years and it is very, very strong. The other thing that we liked about it and then we saw, I think is going to continue to be a trend, is the ease to get there. So this hotel is 90 minutes from Boston, maybe 3.5, 4 hours from New York City. It's very convenient to drive there, incredibly convenient to fly there. Portland Airport has a number of direct flights now across the country, Denver, Dallas, Philadelphia, DC. And then you have Boston, which you can go anywhere in the world.
It's super easy to access. I mean, even Cape Cod is so much more difficult to get to. The traffic is unbearable. Kind of the same issues also of the Hamptons role, right? Just the traffic in and out is really difficult. Something I found interesting that not necessarily thought about when we started really looking into it is I think there is definitely a migration north as you're looking at it. Maybe it's weather patterns that just, make summers even warmer than they
For
used
travel,
to.
not for people to live, just for
Well,
travel.
even for people, for travel and people even living
Yeah.
there. Because, more people buying houses in Maine is just going to be good for us.
Yeah.
Right? It's like there's always going to be people visiting. But like you see, like people like, we live in Florida. So you see so many people in the summertime, like just having second homes in New York State, New Jersey, and, I think there's more and more people going towards Maine. It's the first time recently I heard people going like, oh, I'm buying a place, so I'm moving to Nova Scotia. I'm like, who's going there? Right? Because I think people see a lot of appeal for the weather.
Yeah.
You and I spent a tremendous amount of time in Maine this summer. This
Beautiful.
is so much better.
Well, and it's just people like to experience the change of seasons. I know my kids live here. They like going. We went to a cold place in February in the UK because they wanted to see and feel different weather. And I think that plays out very much on the White Barn side. And that kind of brought my family to go there 2 years ago. We were there for a summer vacation. I had kind of heard that the White Barn Inn was potentially up for sale as a portfolio with a couple other auberge hotels. And I wanted to go there on vacation to experience kind of this New England summer that everyone's been talking about that you just mentioned. And I wanted to see this hotel. So it's a little bit of a, both sides travel. And I remember the hotel is an incredibly famous restaurant. The food and beverage at this hotel is phenomenal. It's been going for 30 years. The restaurant's iconic. You have presidents and world leaders go. It's amazing. We made a dinner reservation at the restaurant, and I remember going with my wife, and it was in the main White Barn, the fine dining restaurant. And you kind of walk up to this little house, and immediately you're someplace special. The greeting from the valet, the flowers, the kind of quaint feel, but like the big American flag you see through the window, it kind of takes you into a different place, a different time, and you realize this is a one-of-a-kind property. And then we went inside and had this phenomenal dinner. And, the waiters have been there for 15, 20, 30 years wearing bow tie. It was just such a cool experience. You're in this old barn. You could be, in Europe. There's not one restaurant in the United States that looks anything like this, and you could never rebuild it again. So it was really just phenomenal. And I remember leaving and, actually during dinner, I told my wife I had to go to the bathroom, and then I was like sneaking around the hotel and doing a little tour. And it was just really super cool. It's a small hotel, 28 rooms. And I really was like, wow, this is a great asset.
Yeah. And I think, outside of, again, the history, the heritage, which is always, by the way, I think something really special, right? To buying a place that has so much history and to be somebody who's going to keep the history and restore it and make sure history keeps going. It's very special. Outside even of, like I was discussing, like population growth into Maine, which is always a positive. Like, I think one great thing that I love about this investment is just the fact that we're also just adding keys, right? Like, so that really removes a lot of aspects that you just don't control, right? I have no control over what the economy is really going to do, right? Or what's going to happen over the next 12, 18 months, 24 months. I have some control, obviously, about management of the hotel, though I'm not the one, parking cars and checking in guests, but I have some influence over it. But I think just the fact that you add more keys when we're looking at potentially adding about, call it 15% of the inventory, it's just an underwriting from real estate that just feels good, right? Like the risk level of that is pretty limited.
And one of the things that surprised me before I even went there, I got the financials, kind of looked at the numbers, and the hotel made a lot of money, particularly on a per key basis. So the NOI per key at that hotel was very high. You would compare it to some hotels in like South Beach that would set records that a REIT would buy. And I was always of the opinion that it's really difficult to make money in a hotel that's less than 60 keys. And what I really understood from this hotel is if you can get the rate high enough and your occupancy is still pretty strong, then you can have it make money if you have a strong management team. the restaurant component, because we got a lot of questions like, hey, I don't want to invest in a restaurant. I want to invest in a hotel, because the restaurant does bring a lot of revenue, but still the profit comes from the hotel.
Side.
But I would argue that if the hotel didn't have the restaurant and it also didn't have Auberge, I think Auberge, the name and the brand, adds a tremendous amount of value. They recently came on in maybe 2020, 2019. Then we wouldn't have paid what we paid. They wouldn't get the rates that they're getting, but the restaurant just keeps people coming back. And it's a real cool story. If you're looking at kind of a boutique hotel or a hotel like this, you really got to pay attention to the food and beverage, because it's one of those things that you can't quantify, but it's going to add tremendous value if you can get it right.
Yeah, sure. I mean, it's like a spa, right? Like, is it the highest ROI project? You might,
right?
Maybe not. Like, some people would look at it as like, hey, I can add a couple of rooms instead of a spa. Yes, but this is just lifting the rate, right? And it's always hard, to necessarily put a finger on like how much more rate am I going to get, but that's how you're going to get your 4 or 5 star, really your 5-star, recognitions. I mean, this hotel has won tons of accolades and recognitions on restaurant and the hotel side, and certainly, having a good spa is a big piece of it.
Yeah, there's a big accolade that we can't tell you about now, but that's going to come out with the hotel that I think is very heavily weighted on the on-property team, but also Auberge. And, the spa is a good point, because my wife then went to the spa the next day when we went there, and she got a treatment, and then they kind of sent her out to the pool, and she came back and she's like, oh my God, there's like so many ideas, so many things that you could do here. Like, you really got to pursue this. And I kind of thought it was like out of our reach, honestly. Like, I didn't think that, we're an investment firm. We have to raise capital from investors. It has to be an investment. We're not ego-driven investors. We're not a billionaire family office that wants to own a trophy asset in their backyard. It had to make sense. And I just didn't think the numbers were going to make sense once we underwrote everything. And we kind of stayed close to the hoop for a couple months. And then we started pursuing it. We started reaching out. We started sending offers. We started, going to visit the property. And the seller is, an amazing group. And I think we had a great relationship with them. And ultimately, we agreed on a price to purchase the hotel. And we were under contract. And it was kind of surreal. And I never count, I'm always nervous up until the day we close, right? But I want to talk through some of the opportunities that we saw and how we kind of approached the underwriting and how you looked at it.
Yeah, I mean, there's so I mentioned it already, right? There's it's nothing new that people don't know. They added a houseboat. Auberge added a houseboat. I think they introduced it to the property in November of 2024. Really started selling it in the spring.
So some of the property is actually on the water. Like,
so
you have waterfront views.
Like 4 parcels in total. Like, there's the main inn, which is, where the pool and the restaurant, etc. are. There's a second parcel on the river that basically is between Kennebunkport and Kennebunkport. It's about, literally a 30-second drive from the hotel. People can walk there easily. And that on that parcel we have the kind of the highest rated suites. There's like 4 cottages, and there's like 1 basically houseboat. We have a dock. And one of the biggest piece from an NOI standpoint is we can add more houseboats, and that's the highest rated ADR suites for the hotel right now. I mean,
it's actually the nicest room right now.
And
I
it's
think
really
too.
the nicest room. And again, it's back to the earlier the beginning of our conversation. It's experiential, right? So people are ready to pay extra for that, right? Like, it's not only just a regular hotel suites. People will remember I stayed on a boat on Kennebunkport in Maine for a couple nights. So I know, like, they had amazing performance this summer. I mean, clearly it was a great PR thing also for Auberge. I think in the summer they were getting they had 3 nights minimum and $4,000 a night in the summer. So the big check. And people loved it. It was a great testament to Auberge, because they also, it's risky, right? Like, what kind of feedback you're going to get. And
I've never heard of a houseboat in a hotel environment.
No, me either. So again, just the ability to have 3 more of those, it's going to be highly rated. I mean, we underwrote it certainly more conservatively, because I was like, well, there was definitely a lot of press around the first one. There was only 1. Now we'll have potentially up to 4. So that's, I was a lot more conservative underwriting the additional revenues for this. Also, I don't know, is it going to capitalize some of the other cottages that we have? So I was just trying to be thoughtful about that. But either way, it's still going to be kind of highest, 15% of inventory for like the much higher ADR rooms, which drives fantastic flow through to the bottom line. So that's a huge piece. So that was really the number one driver of the underwriting model.
And the ROI on the houseboats is incredible. So like, based on a conservative underwriting, the payback is essentially less than 2 years.
Right.
And keep in mind, the houseboat is kind of closed from like January to March because of weather. So the payback is tremendous just on a return on investment standpoint. But then when you look at it, if we're buying this hotel, I'm not going to share the exact numbers. I'm just making stuff up. Let's just say for $1 million a key, maybe we're into the houseboat for $500,000 a key.
Right.
So we're at 50% of what we bought the hotel for. So we're basically bringing down our cost basis in those simple numbers. And it's very additive day one because it's very highly producing income. We own the dock. We, own this whole area that we're going to enhance and re-landscape, which was completely underutilized, particularly when the highest revenue cottages in this houseboat are there. This whole kind of waterfront area just was not well thought out from a landscaping standpoint. So that's one of the things that we're going to do. And the big mover on the model was the houseboats. So in this context, Auberge was managing it before we bought it, and they're obviously going to manage it after we bought it. And they bring a ton of value. We love Auberge. I think they're one of the best kind of, I don't want to call them up and coming because they're very established, but they hit way above their weight class. I mean, they have 30 hotels, but you'd think they have 100 hotels, given how prominent their reputation is and the team that they've built and the talent that they can attract. And we've been impressed by meeting with them. But we wouldn't advise, and I don't think you did this in our model, significant improvements in just the operations, because just because we're buying it, like nothing is changing.
Yeah, we're not changing management company A, B. I mean, you know that. I always pride myself on being a pretty conservative underwriter. I think most firms out there tend to have like an acquisitions team very separate to the asset management team. And you have a lot of people that do underwritings nowadays that actually never worked a day in a hotel, never stepped beyond the front desk, never worked night audits. And it's a problem because you end up having people underwriting deals that just don't really know how, from an asset management standpoint, you can really achieve the business plan that was laid out. That's happened to me in my career so far way too many times in prior life, where people underwrite completely with expectations that just don't make sense. So I'm the one that have to hopefully make sure the underwriting is going to happen. So I'll try to, like I said, underwrite pretty conservatively. So we were conservative, I think, on the boats, the way we looked at it. The first, I think I underwrote the additional houseboats, maybe only producing, I'm trying to remember, maybe 60% of what the first houseboat was doing, just again, to be conservative. And then ultimately, there's few more things we kind of saw that were kind of logical to us. By the way, I mean, the hotel actually, from a food and beverage standpoint, it's a small footprint and basically really only has a gastronomic restaurant, right? It's a full-on tasting menu. There's, they have a second little restaurant on the side that's really more breakfast, lunch, but it's not really prominent. They have very little beverage production. I mean, from a bar standpoint, the restaurant ultimately they have an amazing wine cellar. So they're selling a lot of wines, but, for people that know, like your best margins on beverage, I was just like liquor, like simple liquor, right?
And why don't they sell a lot of liquor? Like why aren't they selling a lot of bar?
They just don't have number of seats. So they only have like 4 or 5 seats around the bar, and they usually sit people there for dinner.
Because the restaurant's so hot, so you have to reserve seats at the bar. Yes. So then if you're staying in the hotel, you sometimes can't get a seat at the bar.
So that's something we saw pretty much immediately, right? Like as guests of the hotel, it's like a beautiful afternoon at 4 p.m. Well, number one, 4 p.m., the main restaurant is not even open. So there's nowhere for you to really sit and have a drink unless you lay by the pool, which, don't necessarily always want to lay by the pool. So we're looking right now at basically expanding the bar to like a really nice patio area so we can really sell more cocktails and just drinks in general. And then like we discussed, there's a second restaurant that right now is lacking a little personality. It's always tough, right? A restaurant where, especially for the guests, like, do you really want to have dinner the place you just had breakfast? So we're really trying to make a little bit more special. So that's something we're looking at, which I think will create just more volume and just better margins. Right now, just to give you an example, like a hotel like this should just really not do more than like 20% in beverage cost. It's running like over 30%, 35% bev cost. It's also selling the higher end type of bottles of wines, for which the margins are less. Right? If you have a pretty basic bottle of wines, you buy it for $25, you sell it for 100. It's a 25% margins. When you go on the more high end bottles, it can go all the way to 50%. Right? So you're buying for 500, you sell it for 1,000. So again, that's where the margins are just not that great. But I think that's easily fixable.
Yeah, and I want to also point out to everyone that all these few things that Charles is talking about, like the patio and really enhancing this little barn, which is the second restaurant, and making it a standalone restaurant, was not stuff that we underwrote. It was money that we had set aside in our CapEx budget, but we didn't really underwrite any revenue associated with it. And maybe there was a little bit to the patio, but it was like very basic. And as we've learned through the acquisition process, you really don't know anything during due diligence. And your opinion changes as you get to speak to the property
Great
more,
point.
as you experience the property more, as you see how other people are using it. And one thing we were really intentional about here is we didn't know anyone in Kennebunkport. And we just like set out to meet everyone in the town. And it was crazy. And it was kind of a joke because like word got around in the town pretty quick that we were buying this hotel because we started reaching out to so many people to get feedback. We're actually raising capital from local people because we thought that would really help from a momentum standpoint. And you kind of get locals to buy into the hotel, and it really like creates a fortress around the hotel.
Local investors investing in local businesses, it's a home run.
A home run. And
Yeah.
people were excited to do it. And through that process, we learned a lot about the hotel that we wouldn't have ordinarily figured out if we were just buying the hotel and didn't talk to anyone. And one of the things that people kept on saying is they love this little barn restaurant. They would go there weekly for dinner because the high-end restaurant is maybe a once or twice a summer thing or once or twice a year thing. But the little barn was a once a week thing. And they thought there was much more opportunity to create its own identity. So that kind of evolved. You know, we had a couple $100,000 set aside to do something in the restaurant, but didn't really know exactly what, just kind of setting money aside. And then the whole front patio area evolved because we were looking for a place to have a meeting and get a coffee.
You and I had tried to have a drink with our lawyers on 4 p.m. on an afternoon. And it was just like, it was like 6 p.m. And so the restaurant was open. The bar seats were occupied, and we're just like four of us trying, kind of awkward standing and trying to figure out where
there's nowhere to go.
Where are we going to be?
100%.
Yeah.
And that's how that emerged. And then now we're going to create this beautiful patio in front of the hotel where people are going to be sitting out. It's going to create this new sense of life. It's almost going to be like a third outlet too. We'll have a little mini, snacks menu there. And I think the revenue generated from that area will be tremendous. But again, we're not quantifying it. We don't know what it is. We know we're going to spend some money there. And, we'll eventually figure out kind of what the IRR
and even
was
like
there.
rent like sort of stays probably 3 nights, right? In the summer. So people go to the White Barn, the main restaurant, like once. Because it's like a 2.5 hour, thing. So people just really, it's great to find a place for pre-dinner drink and post-dinner drinks, right? People are going to go, there's a lot of little restaurants in town, which is walkable. You can walk to the center of town, which is great. So again, the fact that we can have pre and post dinner drink, it's definitely outside of the financials. It's really something that people are looking forward to.
It creates a connection. Now,
Right.
This will be another moment, another experience that people get to have at the hotel that they'll tell their friends about.
And the hotel doesn't have
remember.
a lot of social places now for guests. And
it's very couple-oriented.
It's very couples-oriented. The pool is a very quiet, serene environment by design. But I think just that patio will create a little bit better atmosphere.
It's exciting. So the houseboats was the main thing. Okay, we knew what they cost. We set aside a little extra dollars on top of that. That was like the main ROI. Like we had a full IRR, full underwriting investment just on the houseboat component. Everything else was kind of status quo. And another surprise that came to us was the debt. And we had underwrote this deal, maybe at probably 350 over, so maybe 7.5% interest,
7.5% interest, yeah.
For today's dollars. And we had a unique approach to sourcing the debt. And typically we would go with a debt broker, capital advisor. Oftentimes, we have relationships with everyone, but oftentimes the selling broker has a great shop. They already have knowledge about the property. We use them. And we tried a little bit different approach here. And we just got phenomenal debt terms on our own. And it was a real surprise to us because we probably came in, much lower than that. And the debt process was also just super easy. And I think part of it was just local knowledge of the property, but also the prominence of the asset. I think Auberge certainly helped. But you got the sense that that the bankers really thought that this was a very unique asset that they wanted in their portfolio, and that also they believed that the real estate was very valuable too, in addition to the business.
Yeah, I think for them it was, you're talking about ego earlier. I think for them there was definitely a pride moment.
Pride, not ego, but definitely pride.
Yeah, definitely a pride moment for these guys to have this asset part of their portfolio.
And it was a few lenders that kind of, felt the same way. We ran a competitive process, and that was pretty interesting. And the other thing that I think we've gotten pretty good at is being very mindful of our due diligence budget and how we spend money and how we set up deals. And we really have gotten this down to a very, very specific formula. We know how the entities are structured. We can recycle a lot of documents, which saves significant time and money. Our lawyers, we use the same lawyers for everything, and then we go out and get local counsel for specific local things. But I think if you look at our due diligence costs, it's not like we're missing things. Just
right, no,
we're spending it well compared to someone else buying this hotel. Particularly, the purchase price isn't $100 million. Every dollar counts, especially if you want to make some enhancements. I think you'd find that we, did this pretty tight.
No, I think we're smart where we spend the money. I think just to your point, the debt broker alone probably would have a cost. It's a smaller size loan, but still, probably could have cost $250,000 minimum.
Yep.
But we're still not shy of spending money elsewhere. Like you said, most firms do a PCA, property condition inspection report. And then we went further. Also, we hired a roof inspection. We did, a lot more inspection. There's a big piece of land on the river. So we have a big bulkhead. We did bulkhead inspection. So we definitely went, I think a lot more details than maybe other people would, for sure.
And I think the other unique strategy that we employed, going back to, we mentioned it earlier, but just was how we were sourcing capital for this deal. I didn't really want an institutional equity partner. I think the deal size was a little bit small for them. Maybe we would have done it, but we were really trying to approach family offices and high net worth investors. And we really just reached out to the community and met a lot of high net worth investors in this local area, because there's a lot of them there. Obviously, they summer there, and then they would introduce us to our friends. And it's a strategy that really, we did it here the first time, but I'm going to do it in every deal that we do.
Yeah, absolutely. I mean, we looked at our roster of investors. We definitely felt that this hotel was going to be, every investor obviously look at the numbers, right? It's a financial decision. Of course, that's clear. But this one felt for a lot of people kind of an emotional investment as well, right? A lot of these people in this market have homes for, a long time, even as child. Their parents already had homes there. So my point is,
and they have experiences at the hotel.
Exactly. With the restaurant being there for so long, they've been there for big moments in their life, celebrations of big moments in their life, big anniversaries, big birthdays, etc. So all people really felt special about this asset. So I think to do this makes a lot of sense. We had looked at our investor rosters and trying to look geographically, where is everyone located. We surprisingly did not have a lot of investors in New England, as a general. We just did not.
Yeah.
So it was really a brand new territory for us, and it just made a lot of sense.
Yeah, and we obviously got a lot of no's, but we also got overwhelmingly a lot of yeses. And I think there was a sense of pride. And I also think people understood the investment very quickly because it was in their backyard or regionally in their backyard, or they visited it. And I think that helps. If you're trying to raise capital for a hotel that the person's never been to and they don't have a locational kind of advantage or knowledge about the area in some special way, it's definitely going to be more difficult. And for sure, we're looking at another kind of boutique independent hotel right now. I would exactly target that same strategy. And then the other added benefit is you now have people that are like advocates for their own investment, but also your collective investment and the property. But you also have critics. They're going to be coming into the hotel. If they don't have a good experience, we're certainly going to hear about it and give that feedback to the GM.
Because they will go a lot.
And they're going to give the feedback. Yeah. And then if they have a great experience, now they're going to make it, they're going to have their daughter's wedding there. They're going to have their company retreat there. I mean, one of our investors, it was pretty amazing. We reached out to them cold and she said, "You're not going to believe this. A week ago, I did a full buyout for my company at the hotel for like 4 days." And I was just shocked. It's like, oh my God, this is amazing. And this is an annual thing that she does. And we had no connection. I mean, she probably thought the hotel gave us her information, but obviously
she had just stayed on a houseboat and was, thrilled by the houseboat experience.
And we got great feedback from her. I was thrilled by the houseboat experience. I mean, if you haven't stayed on a houseboat, it is the coolest thing. I mean, I've been on yachts, I've been on boats, I have boats. It's very different because you wake up and you have a regular like house window, but you're on the water. So you see like guys in kayakers going by and like, it's just surreal. It's like a Wes Anderson movie where like, just these things are happening. It's very cool. So we're going to have 3 more of them. We already started the construction process for that. Before we talk maybe about kind of what we're learning now as we own the hotel, I want to talk a little bit about some of the kind of CapEx things that once we were hard, the underwriting was baked, that we started to identify in terms of additional opportunities. So one was kind of enhancing some of the guest rooms. And at first, what we did is we kind of said, all right, we're going to spend $4,000 or $5,000 per guest room. And there's a variety of guest rooms. You have some cottages, you have some smaller rooms in the main inn. There's a real variety. Each room is unique. And one of the things that we've now learned is that it might make more sense to spend more money on the smaller rooms because they can actually generate even more revenue than what they're generating if they were a little bit enhanced versus, spending it kind of equally.
Yeah, it's back to what we were saying earlier, like, the fact that we're both doing the acquisitions and asset management. I've had so many instances in the past where you acquire an asset, and again, the acquisitions team has a laid out business plan where they think we should be spending the money on the CapEx front. But then when you start living in the place and really understanding what people like and dislike, you might realize, well, that we thought was important at first, but now that we're really thinking about it, we're living and breathing the hotel, it's just not as important as it was, or we thought it was originally. And same thing, exactly what you said. We felt like on these smaller keys, there's like 6 rooms, I think they're called traditional rooms, and there's just a smaller bed, like smaller square footage in the main inn. We think we just need to spend more money into it. So right now we're looking at just a brand new OS&E package for across the hotel. That would be all the guest rooms. But then
what is that? Just for people that don't know.
Sorry, OS&E is like basically think about like mattresses, linen, terry, coffee machine, TV, mini bar, little soaps, all of those little items, all of these items basically in the guest room. So we're looking.
And that has immediate impact. So that's really cool. And it's not hard to get and procure. And what we want to do is like
28 keys, it's also pretty inexpensive.
Right.
That's really the nice piece.
Right.
Right.
Yeah.
So, and then the smaller rooms, we feel like, yeah, again, there's probably a little bit more opportunities, right? Just rethink maybe some of the furnitures inside the room, make them a bit more efficient, a little bit more special. Maybe we redo, have a more special, really cool print on the wallpaper. Like, so we're not pushing walls by any means, but I think it's just cosmetic. And again, we're talking 5-6 rooms, just people. Even if the room's small, it's not that big of a deal. You kind of want to walk in, but still have a wow effect. Look, people know it's an inn that is 150 years old. So I think people don't expect to walk into a Four Seasons guest room. But, and they come for that reason anyway. But we do want to make sure we wow them, even on the smaller rooms.
And the same thing with the spa as well. We don't totally know exactly what we're going to do with the spa yet. We want to kind of change up some of the products, enhance things, but also keep in mind, not everything has to be done at one time. So I think part of the strategy with the spa might be to do kind of an initial round, new products, revamp the retail, really clean that up, new lobby, and then maybe next year go into some of the treatment rooms and enhance certain things about those.
What's cool also with Auberge is, which there's not that many brands out there that really, they're that good at that. Like Amani, I guess, is pretty good at it. It's just the whole experiences. They take experiences very seriously, have a program of experiences like for the summer or for the winter. And for instance, you can go on a boat for 3 hours in the afternoon with a fisherman to go, to fish lobsters, right?
But they curate that. That's what's cool about
it.
Auberge.
That's really special. And it's another revenue generator, right? And that's again, is it a great profit center? Not amazing, not the same way rooms are, but it's still very good. And again, that's also what really drives the rate.
And it hooks you into the hotel.
I think you mentioned to me when you came to Kennebunkport last summer, you could not stay at the hotel because the hotel was sold out.
Yeah.
But you ended up basically getting the list of experiences they offer and then book them.
Yeah. Well, they had it on their website. And the cool thing is like they find like the local great fisherman, the local great hiking guide or whatever, and they do a little story about him on the website. So it's like listed the guy's name. So I just found him online and called him. And it's not like some little hack, but it's more to Auberge's credit because they don't just yellow page, find a guy with a boat, and that's going to take you out.
Actually, curate the experience.
They curate it. And the hiking guide, he told me that Auberge brought him into the restaurant and really made him experience what the restaurant was about so he could understand who the guest was so that he can tailor his hike to a guest that's spending $2,000 a night to stay in a cottage.
Yeah, right now I keep wanting to add more values to the guests. So at least people be clear. You'll be shocked by the number of stuff the hotel does already for hotel guests, but hotel guests don't necessarily know. Like Auberge has like a pool of they have like a fleet of like 5 or 6 high-end Mercedes that the guests can use for free.
So cool.
They have like a bunch of complimentary things around the hotel, but guests don't necessarily know that full list. So we're trying to make sure part of the new package or script at the front desk is people really know a list of all those things that we offer, right? We set up beach chairs at the beach for them. Like it's just a lot of little things like that they just don't know about.
And there could be more. And that's one of the things we're going to work with. And to Auberge's credit, and we were really impressed. We met with them on property. We met with a lot of the senior leaders at Auberge maybe a week ago. And the cool thing is like Charles and I will have an idea, but then they have a whole kind of, they call it their home team or their corporate team, their above property team, where they can go then execute that. And it's with a professional. Like it's not just some random sales and marketing person. They have like an experienced person. They have a food person. They have a design and branding person. They have an OS&E person. Their design team is unbelievable, and we've worked with them in the past. So you have all these professionals, and then they work together. The other unique thing that is great that I think a lot of places would screw up is, so let's just say you want to have an experience. So their experienced person, you say you want to do a fire pit with s'mores.
Right.
So their experienced person at the home office creates what that might look like. And she's like, all right, this is like the s'more basket you have to use. Here's the items. Here's where you buy them. Here's all the little tools and all the whatever. Then that goes to the design team.
Right.
And they look at it to make sure it fits the kind of vibe of the hotel and the experience of the hotel. So now everything is cohesive. And that's really the value that you get with, and like I don't have like 10 people on my team to be able to do that from an ownership perspective. So I feel like I'm getting good value. And obviously you have to be the squeaky wheel to get that. clearly, but it's amazing that they have
And
that.
it's not even for only paying amenities. Like last week, or was it last week we were there on property? Like even I was like, you guys, I love, for instance, personally, like in one of those special places, I don't necessarily want to go to the gym, right? I want to go run so I can really kind of experience the neighborhood. And I was like, do you guys have any jogging maps? And it's like, no, we don't. And it's like, oh, so they told me right away. It's like, we already got in touch with our marketing team. We're putting together jogging maps. They're going to have like different options for different distances. And it's like, again, full team of designers that's just going to work on that. It's just phenomenal.
Yeah, it's not going to be just like some Google Maps printed
Right.
out. It's going to be a beautiful thing that you could probably access on your phone with the QR code. So that's really exciting. So after buying this hotel, do you think we're going to buy others? Like, how do we feel about this investment and this category?
Yeah, certainly. Look, time will tell, but I think it's clearly luxury is overall ultra luxury, which I think this one qualifies, because the term luxury has become a little, it's very vague, right? What luxury means, but I mean, in this hotel, we're talking like over $1,000 ADR, so I think it's fair to say, it's safe to say we're in like ultra luxury kind of. It's just very, it's a little bit more recession proof, let's put it that way, than some other class of real estate, on hotel real estate. So I still feel good about it. I still have a lot of conviction for it, especially like in high barriers to markets like this one. But probably I have more convictions with property, like I said, where I can have real estate advantages, like this one where we can add keys, right? So that's really key. Like I'm not that really interested most of the time in thinking like a management team used to do X and I can do better the next 5 years. That's the part I tend to be a little bit more.
Or I'm going to buy it at making up an 8 cap and then somehow miraculously sell it at a 6 cap.
Right.
We didn't
exactly.
underwrite that.
No, we never do. We always increase, or almost always increase cap rates as we hold it, because it's property by definition ages and so forth. So you just never know. So we definitely don't decrease rate caps.
And I want to be clear, this was an investment. This is an investment that I would put up against any other institutional private equity investment from a return expectation standpoint. But that also means these deals don't come around that often. We weren't just going around saying, "Yeah, we'll pay you $2 million a key for this hotel." We were doing it, and credit to the seller, they were wise enough to sell us a hotel where they left some advantage and upside for us. And we had a good experience with the seller. They were honest with us when they were negotiating. We were trying to kind of knock them down on some CapEx things. And they said, look, this is our minimum. And then we had to figure another thing out, and they were agreeable to that. And that's how you want to be as both a buyer and a seller. Because if we bought this asset and then immediately felt like, oh my God, I got my back to the wall, it's really tight, I have a lot of pressure, that's just not a great place to be starting out. And I feel like we're starting out, especially where the pace is on this asset, at a good spot.
Well, I think we also got a little bit lucky. I think you and I always have also a great affinity for hotels that are like off market, quote unquote. And I was thinking about it. Off market doesn't necessarily always mean like there's no broker, right? Or it's not been marketed at some point. I'm not interested most of the time in being in a competitive bidding process, right? With a bunch of other people. And what happened with this one. Like this one originally was marketed as part of a portfolio, ultimately because the broker thought, they're smaller assets individually. If I package them, I'm going to find a larger private equity company who's going to want to buy it. And it's a big check for them, big enough check, they're going to want to do it. If it's smaller check, usually the big firms just don't want to do it. And it just didn't work that way.
The timing didn't work,
But what was interesting is one of the most likely buyers may have very well been like a very high net worth, very wealthy high net worth investor, right? That would have been local. Some of the other assets they sold, that broker, that's exactly what happened. And when we were, again, capital raising and talking to a lot of local, no one had any idea that hotel was for sale, which Jake and I was like, well, the day we exit, it's certainly a huge advantage for us because there's a major pool of wealthy potential investors that just, would look at that did not know this hotel originally was for sale.
100%. 100%. So we're excited for this asset class. We'd like to buy more. And what I like going into an investment is just hearing from the management team. There's actually more opportunities that they just didn't tell us about that we're finding out as we kind of peel back layers. And there's a couple things. There's things that we found in the P&L that we can tune up a little bit. There's things that we've found by if we spend a little bit money here, they can actually charge a higher rate, and that they've been kind of capping it because they didn't want to get crushed on service scores and things like that relative to some of the quality and some of the finish level of certain things. And if we just fix that, then they can kind of remove the cap and we can even be in a higher rated environment, which would be really interesting. And then the other thing, obviously, we're intentional about is not extending ourselves, not over leveraging the property, and building up significant reserves to do things as they come up, and having that foresight. We talked to some people about this investment. One group we talked to was like, "Oh, we're getting we want to get 70% debt." I'm like, "Dude, you guys have never done a deal." Like, I've dealt with plenty of effed up deals, and they're all effed up because the debt is too high or there's an issue with the debt. Like, we're not doing that. And you just learn a lot, having been in the industry as long as you have and I have, what not to mess around with and what to do and not to do. And I don't think we would have that perspective if all of our deals were so easy and rosy and perfect.
No, sure. You have to go through bad times.
Yeah. You have to swim through the mud to finally get to some clear water, I think. But what else are we talking about?
Yeah, I think like you mentioned earlier, I think there's a lot of other opportunities we're finding out. And, and I think from an asset management, that's where it gets exciting is, as you kind of dig deeper, like there's always, we discussed earlier, right? The experience is one piece. Like I'm reaching out to the spa director at Auberge to try to, basically we're trying to figure out which treatments are the most profitable, which treatments are selling the most, right? So there's a whole matrix you can kind of build around those treatments and try to make it more profitable. There's a lot of things like that that's just kind of fun to work with. And then, last thing that is important also is in a luxury asset, especially, it's all about service delivery, right? And I think it's very important for us to always ensure that the staff is very happy overall on this property.
Yeah, you should talk about that because we're spending money
and
there.
We're spending money right away. It's very small piece of land. So there's, like we said, there's just not a lot of space for back office or anything. So right now, a lot of the staff, basically offices, like the GM, and they all spread, either they're spread different offices around town, or they're there's this old trailer that looks like shit.
Yeah.
It's my French, but they look terrible in the back. And so right away, we're going to spend money by get them a brand new trailer, because trailer is a tough word. There's probably a better word for this. It's
no, it's like a building,
but it's a really nice
temporary
one now.
structure.
Yeah, because we just want to make sure, people just are happy to go to work, right? So that's very important. There's no ROI, right? I can't really put a number to it, but we feel at this level of ADR, and the service is currently exceptional, which, by the way, is one of the hardest things to really achieve. And we just want to make sure we do that. And again, Auberge, I think, does a great job at just making their employees happy. But I think it's our responsibility as well to the community to just make sure, the staff is happy. So.
And one cool idea, Auberge said, hey, I think it would go a long way. They have a employee break room, kind of a meal room, a little hangout room for the team members. And they're like, oh, it'd be great if you could spend some money in there. And what I was thinking is sure, I know what I would think I would want, but I don't work there. I don't sit in there. So why don't we just say, hey, we're going to give you guys 10 grand. You guys spend it however you want to spend it. You have a little committee, you figure it out. And then that way they really own it. They get excited about it. Maybe they want to decorate it themselves. So that's something that I think we should do, and we'll go a long way. And we'll keep you updated in the process as we go through it. But we're planning on executing all these CapEx projects through the winter so that everything will be ready in the summer. And if you'd like to visit the property, hit up Charles. We'll forward you the GM's information. We'll connect you with the hotel, really make sure you have a special stay. But Charles, if people have a deal, if they want to show you a preferred equity investment, if they want to tell you about the greatest boutique hotel deal they've ever seen in their life, how do they get in touch with you?
Best is to email me, or actually we have like there's another email address called like investors@dovehillcoast.com, and basically gets to our inbox, and then we'll get back to you.
What's your email address?
My personal email is charles@dovehillcoast.com.
Amazing. Thanks for coming on the podcast.
Thanks for having me. And maybe we do in a year or two from now, we'll do a look back on this investment and see what we learned and how it worked out.
We should. Awesome.
Hey everyone, it's Jake here. Thanks again for joining me on this conversation. Be sure to subscribe on Apple Podcasts, Spotify, or YouTube. Lastly, don't forget to follow me on Twitter @Jake Wurzak. I'll see you in the next episode.
Jake Wurzak is the founder and CEO of Dovehill Capital Management. All opinions expressed by Jake and his guests are solely their own and do not reflect the opinions of Dovehill Capital Management. This podcast is for informational purposes only and does not reflect or represent real estate, financial, or investment advice.